Hey, this is Jack from Alpha Charts with a state of the market video. Today is Friday, September 29th, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, I'm doing this Friday morning because I have something going on Saturday. But I think that the markets, unless they completely fall apart or rip higher, should be roughly about the same. So we'll get going. Before we get started, if you don't follow me already on Twitter or X at AlphaCharts365, please follow me over there. And also, I have a subscriber group. Give a ton of content, a couple of highlights. First off, the goal is to keep you on the right side of the market and the best names possible. You know, we got long in May. We got neutral at the end of July. We got short a couple weeks ago. And so we've really been in sync and then really not only making money, but keeping the money that we've made in the market. So if you're interested in that type of content, also, I give midweek videos and I do market notes. I do focus lists and watch lists. I do a longer version stocks to watch video. Again, a ton of content, as well as just throughout the week. I do, as I'm seeing what's going on in the market, I'm sharing it with my subscriber group. So if you're interested, click on my name at AlphaCharts365. Click on subscribe. It's $10 a month. I mean, that's less than a Chipotle meal. So it's just, it's just the value is there. So if you're interested, check that out. Let's get to the video. S&P 500. So again, we had this, lower highs and lower lows, right? This is what we call a downtrend. 50 days hooking down, and there's some issues now. The 420 area is where a lot of people are saying where we're going to see a bounce, and we're going to zoom right into there. And you know what? We may see a bounce there. We don't know if this is the bottom, but that was a nice candle right there. As for now, I still see us underneath a lot of the moving averages, and so this has work to do on the S&P 500. Is it constructive? Absolutely, it's constructive. Is this the bottom? I can't too soon say that. It's a bottom. That's a bottom. I'm not sure if it's the bottom. So I would just definitely be careful with that. On the week, price was down about 0.5%. And you see this nice long tail right there, which is kind of nice. Decreasing volume. That's interesting. Going to RSP, we see the RSP again. It looks like there's going to be a gap up this morning. RSP down roughly about the same. So there's no real divergence there. We are seeing a little bit of a ramp up in volume. Okay. Going to the daily on the RSP, though, you see price is below a flat 200-day, and really we're not seeing them, at least not yet, retake the moving averages. Now you see I drew this in a couple weeks ago, or at least last week, and this is still a very possible scenario that's going to come up into the moving averages and then roll over. I think that's very possible, or can make a higher low. A lot of different scenarios. But until we start to get above some of these shorter term moving averages, again, that's my 9, that's 23, 50, and then that's the 200 is in red. Until we get above these moving averages, this market is still suspect, right? Looking at the Qs, looks exactly the same. Held a very important area right here. Tried to turn lower right there. Bull stepped in. And it looks like it's testing now the shortest, the 9-day moving average. We do have a declining 50. You can't, I can't be too bullish on this market until we get, above some of these short-term moving averages, maybe even this trend line, right? You want something that's, I won't say concrete, but maybe it's got multiple touches on this trend line. So maybe if we could break out of this trend line, we could get more bullish. But right now it's just not there. On the week, flat on the week so far. Again, we have one more day to go, right? But so far, flat on the week. Equal weights. Let's look at those. 0.4, equal weights doing better than the cap weighted. That's really nice to see. Again, it looks about the same. This 74-ish, 73, 74 area has been super important for forever, right? For a long time. Important here, came back, and now it's important here. So we got real happy and bullish on this breakout. If you look at the date, June 1st, right? That's when this was one of the reasons why we were getting bullish the market back in June. There's a lot of reasons why, but this was one of them. And you see, we did really good until July, end of July, right? And then we got bearish or neutral, really. And then we got kind of bearish in here, right? So again, this is, at an important level. Now, how the bounce happens, that's what we're going to be watching each and every week. Looking at the IWM, the weakest of the weak, right? I drew in this kind of falling wedge into potential support, and that's what I'm kind of watching. Now, I don't know if this wedge is going to work. None of us ever do. We're just drawing lines on a chart, right? But this is a possibility. Again, it may not be the right one. It may be, it could be, listen, I could, say there's some sort of channel going on here. It's going to be just in a channel, right? So again, I don't know. I just don't want to muddy up my charts too much. That's my going thesis. It may or may not happen, right? Today it could just totally bust it open and make it invalid. But the point is that it's prices below a flattening to not quite declining yet, but it's starting. Look at that. It's starting to decline just a little bit. 200-day moving average. There's your 50-day, just really zooming lower. Again, stuck below all of the supply. It's going to be hard for IWM to really get some footing. Now, not saying it can't, but we have some work to do in the chart. On the week, it's probably been up on the week. It is up on the week about 0.5%. Again, going into this Friday, it could be up even more. At least there is a gap on the, this morning pre-market. And we'll see what happens, right? We'll see what happens. Can it hold it? Can it push higher, right? Where's the volume look like? That's all the things that we will be following. Just to make things square, let's look at the mid caps. Again, it has a falling wedge-ish look, but price is below the 200-day. Looks just like the IWMs. Not quite as weak, but pretty darn close. So yeah. So on the index level, constructive price action, yet too soon to call a bottom or the bottom, right? It could just be an oversold, overextended market bounce. So we have to be careful with that. Sometimes we just can't call it. It's just too much conflicting information, and you need more bars, a little bit more time to look at. So I mean, I think a neutral stance here makes the most sense. I wouldn't want to be too short in this market, because if you're wrong, you're going to get your face ripped off, and you don't want to be too long in this market either, because if it rolls over, it could waterfall against you. So right now, the indexes look neutral to me. Let's look at the ETFs. XLF underneath the 200-day and the 50 hooking down. Again, never a good sign. This $30 area is the most important area on, maybe in the market, and has been for a while. Here's your 2007 highs. Here's your 2018 highs. Here's your 2020 highs, right? Here's your 2022 bounce, 222 bounce, April 23 bounce. And now we're back at the, not quite back at the scene of crime, but it looks like it may be trying to get back here. And that's why this $30 level is just crazy important. And we're not there yet. So that's the positive news, right? If we never get there, great. If it breaks, that's a different market that we're in, right? So we got to be careful with that. Looking at SMH. Is this a bear flag, right? That's the question. I drew this the other day so we can kind of, do something like this. Is this a bear flag? Right now, the answer is no, right? The answer is no right now. Why? And I'm going to take it off, actually, because there's no real reason to have this on there. Because it looks like price is going to gap up, and if it can retake, which it did the 9-day, and then if it can get close to a retake this 23-day, this could start to put in a bottom, right? And, maybe maybe this trend line becomes important, right? And again, this looks like a lot of the other the indexes that we've been looking at. But I like that it's starting to retake some of its moving averages. That is a big positive. And you want to see SMH leading. Well, for me, that's leading, right? They're one of the first to retake the moving averages. That's a positive. Again, we still have a declining 50, but we're above the rising 200. Again, mixed signals, but constructive, which I like. That's good. And let's look at XSD, which is the equal weight ETF. Now, this one, again, constructive that retook the 9-day. That's nice, but it's below the 200, and so there is some. Doesn't quite look as good, the equal weight, right? Which tells me that Nvidia is probably helping out big time on the SMH. But again, equal weight doesn't look quite as good. Let's look at the transports, XTN. Again, very strong down move. We talked about this rising wedge and the breakdown from the rising wedge, and you can see it really it really moved quickly. That's a quick move right there. Below the 200-day, the 50 had a big time U-turn. Has a lot of work to do. Transports have a lot of work to do. If it can't hold this, can't get back above the 200-day and it turns back over, hard to say that the rest of the market's going to go higher, right? All these are very important. Let's look at IYT real fast. That's the cap weighted transportation index. Again, it looks the same way, a little bit better, but still underneath the 200-day. Let's look at ITB. I'm sorry, not ITB. ITB. Home construction. Here's your home construction. Again, has a falling wedge look right into what, maybe where the 200-day is going, right? And if we can somehow get close to that and then break out, that's the bullish scenario, right? If this breaks down below the 200-day out of this kind of falling wedge-ish look, that's the bearish scenario. So again, we don't have confirmation one way or the other, but that's kind of what I'm seeing as far as home construction goes. This is the pure play builders. So it's kind of interesting to see where this goes. We don't have that information yet. Here's XHB. So this is also builders, but it's also some ancillary companies that help provide them with things. And above the 200-day still. And again, we don't know if we're going to come down and test the 73 or if this consolidation. Again, not quite a rising, not quite a kind of like a broadening pattern right there. Expectation is, because this is declining, that this should at least come down and maybe retest 73-ish, right? That's the expectation. If this breaks above, out and above, then that's an expectation breaker, and I think we get much more bullish. If this breaks down, that's what we kind of expect, but it doesn't have very much far to go, so tough to play that, right? But as it goes, not a good look. So when we look at the ETFs, we looked at financials, we looked at semiconductors 2 different ways, we looked at transports 2 different ways, we looked at home builders 2 different ways. Everything is saying that they're bearish, but we have maybe some optimism creeping in there. Things are extended, whatever, and we have to see how they work out. Again, hard to get bullish with that because we're not seeing the breakout to the upside, but the consolidation with some bullish tones to it, undertones to it, keeps us again in a more neutral state. That's so far. So looking at indexes, to me, they look to be neutral. Makes sense, right? When I say neutral, it means high cash, right? That's what neutral means today to me. And then we look at all the indexes, all the subsectors, same look to it. So again, high cash. Now let's look at the internals and see what they're showing. Shut some of these off. Back the line chart for this. So on the VIX has come back into what, 16.75. So again, we have this nice little move higher in the VIX, but it really nothing sustained, right? Like there's no panic in the market like at all, which makes me think that this is going to be, resolve sooner than later, right? That's what this is kind of telling me, that no panic. That's what I'm seeing there. And when you look at credit spreads, the bond market is basically saying, yeah, everything's fine, right? No panic in the bonds. So those two things are making me think that this is just a normal pullback, right? This is not the end of the world type of thing. Market pulling back to 15%, kind of normal. So that's what those two are kind of showing me. Looking at the put call ratio. So this is a measure of sentiment. We did get an extreme reading on Wednesday, which I like as a contrarian indicator. This tells me, hey, everyone thinks the market is never going up again. And I think that, usually it's a good idea to take the other side of that bet. So that's, again, another reason why we shouldn't be short the market, right? Because the boat is getting loaded up on one side. And again, we may get something like this. I wouldn't be shocked, right? It could be from like 2022, where you see a bunch that kind of went in here, came back, then again got bearish again, came back. I don't know how many times it may do it here, but I would love to see a deeper pull into here after, a little choppiness for a day or two while we're neutral, and look for the turn of the market in this area, right? And that would have been a very good time to, as far as timing goes. We'll see if that materializes or not, but I do like the way that that this got overdone to the downside, and sentiment as a contrarian. What else are we looking at? Let's look at percent stocks above the 50-day moving average. Again, it's just a nice little breadth indicator. It's one of many that I look at. And it got kind of low, right? Under 20. That's pretty low. You see it's bounced here before. But again, took some time to do that bounce. It could get even lower. Don't be surprised if we get another push lower. You'll see, another push lower would coincide, going back to PCCE, the put call ratio, with maybe some more bearish tones to there. And I would love for these to start to line up, right? This get into my green zone, which is under 10%. People get crazy bearish. And now then we can really look for a meaningful way to play on the long side. Not quite there yet. So again, I'm looking for extremes with these indicators, not seeing the extremes quite yet. It's bearish. There's no doubt about that, but not seeing the extremes. So we're going to keep watching it, right? Week by week, day by day. We watch these. The dollar is really running the market, and you can see it broke out, and that was very bearish, the market. And you see Wednesday, when things got really bearish, the dollar was really ripping. And then Thursday and so far today, it's come back in, and that is giving a lot of relief to the market. Now, this is a very important area. Is this a retest of the breakout and it bounces higher? Or is it going to roll over, and that's a whoopsie up here, and that is the catalyst for the market to zoom? Very important thing that's going on right here. So we got to watch this dollar coming into the all day today and really early next week. If it bounces, that's the bearish scenario. And if it comes back in, that's obviously the bullish scenario. So a lot of things going on there. Again, it's a driver in the market. And 10-year yield, again, it was ripping on Wednesday, caused that extreme bearishness. Thursday, not so much, right? It tried to move higher, couldn't. So I would expect maybe another day or so of at least sideways movement. Now, the trend is, I'm going to put some trend lines on here. Not trend lines, but some moving averages. Listen, the trend is higher. There's no doubt. And I still think we're get to 5%. Whether we get there next week or next month or even next year, I don't know, right? But I think we get there sooner than later. And if we get there quickly, that's the bearish side, right? If we get there slowly, that's some of the more bullish ideas in the market. So again, how we get there matters, and the speed of which we get there matters. We're at 4.6 right now. So, this is about another 10% move to get there. And that's a big deal. And again, 5.1, that's the spot where if we start moving higher than that, that's going to get really crazy. But we're not quite there yet. So again, dollar 10-year yield, important things to look at as far as drivers of the market, the backdrop of the market. So internals actually look better, right? So again, that's in the end, we're going to talk about being neutral in the market, being high cash in this market, because we don't know if, we're going to tag this 200-day. Again, you want to get short this market and you only have, 2% on the index to move. I mean, if you're a real short-term trader, I guess that makes sense. But I rather see this potentially chop around, maybe even come back and tag that, right? Look for signs of a bottom and then look maybe to play to the upside. That's my thinking. Again, we don't know if it's going to play out. We don't know if this falling wedge, I'm sorry, it's on IWM, the falling wedge is going to play out or not. For all I know, this could rip higher. But I want to see more bars, more time needs to pass for me to take a directional position in this market. But what we can do now is keep our watch list ready and fresh. Like there's a handful of names that are already starting showing up on my scans that I'm sharing with my subscribers of names that are starting to really hold up well and are starting to pop up on my watch list, right? Those are the beach balls underwater. If we are going to get the turn, those are the names I want to be involved with, okay? If you haven't yet, check it out. Subscribe at Alpha Charts 365. I think it's going to it's something worth your while. It's $10 a month. It's really the best deal out there, especially for the amount of content that you're getting. All right. So good luck, everybody, and have a great day.